Tom, it's good to see you. I was really looking forward to talking to you today because we have a lot going on. As you know, the Fed's rate hike has roiled markets again. Markets fell following the Federal Reserve's 75 basis point rate hike. There was talk it was going to be 1%. This is less than that. You thought that the markets would be happy, but instead, we are seeing a lot of red on the board. This is the S&P for the past month. Tom, what's behind all of our pessimism and all this volatility?
Well, there's a lot going on in the world and in the United States, obviously, that's leading to this pessimism. There's basically 2 years of double-digit inflation, which really has bothered people. And that means that things cost more, and it means that our living wages are not keeping up with those rising costs. And people may be getting a little bit of a raise every year or every couple of years in their paycheck, but it's not keeping up with the doubling and tripling of costs that are going on. So, I mean, beef, for example, is up 300%, gasoline's up 200%. So on and on and on, right? So you have that. You have other issues. We have not collapsing, but we have a retraction in the housing market because the interest rates have gone up. And again, we've had 3 Fed rate increases, which have basically tripled the interest rates. Right. So there's a lot of stuff going on. Again, globally, there's a lot of other things going on as well. There's an oil crisis going on. There's a war in the Ukraine that people are still talking about, and in China. So there's a lot of reason for pessimism today.
Right. Yeah. No, laid out like that, it certainly makes sense. So the reason behind those rate hikes is, of course, to cool inflation, which, as you've said, hasn't really worked so far. So can we expect another interest rate hike?
I'm not sure. I think that's still a question mark at this stage. I know Federal Reserve Chairman Powell the other day came out and said he's not even sure. I think this is just my personal opinion at this stage. If there is one, I don't think it's going to be another 75 basis point increase. It might be smaller. One of the reasons why that they are increasing rates, besides trying to tame inflation, is they need a card in their deck to play when the markets continue to go down, which would be pulling back on interest rates. So it's a double-edged sword that they're doing. They're playing a game there. So is there going to be another one? I don't think anybody's sure, but I think if there is, it won't be as dramatic as the last few have been.
So since we can't see into the future what's going to happen, then what are the smart moves that investors should be considering right now?
I think the smartest move is don't panic. I know it's tough. We were talking off camera. A lot of people, that we know aren't looking at their statements. They're afraid to look at them.
Yeah.
But for those who are, they've seen a 25, 30% decrease in their account values, and emotionally they may just want to jump out. But as we've talked about in past podcasts, if you miss those good days on the rebound, you're going to miss out on a good sized correction. I mean, the last 2 days, the markets have been back up 5%. So if you panicked and you jumped out of the market, you would have missed that, which would really hurt your recovery. Now, for people who have more time, then just maintain and maybe even put some more into the market at this stage and buy at lower prices. But something that we've done that I think is vitally important, and we've been doing it for a couple of years now, and even into the beginning of this year, is instead of thinking of asset value, we're thinking of creating income. It's far more important, in my opinion, again, to make sure that you have a paycheck every year or every month that's going to cover those bills that you have, your mortgage, your gas, your food, et cetera, et cetera. So creating a guaranteed income stream to make sure that your bills are covered no matter what the markets are doing, I think is probably the most important thing that people can do.
Yeah, I like that, Tom. It's just a different way to come at that problem when we feel so kind of powerless in whatever's going on in the market. That makes a lot of sense to me.
Sure.
If somebody would want to talk through some of those options with you, or again, just talk through behavioral finance, which I think is really interesting, what's the best way to reach you?
As always, call us 973-394-0623 or reach me on an email, tjoconnell@internationalfinancial.com.
All right, Tom, thank you.
Thanks, Erin.